let us move into liabilities. And you may be saying, well, if we can make money from all of these, then what is it that takes away money from us? Liabilities are debts or obligations that you owe to other people, such as mortgage or credit balances, etc. But there are other liabilities which, as individuals, we overlook from time to time, and we're going to get into those said liabilities. We have accounts payable. Yes, account payable. This is the money that a company owes to its supplier for goods or services that have been received but not yet paid for. So let us look at it. When you receive goods and you haven't paid for it, that is account payable. When you make purchase on your credit card and you have not yet paid that bill, that there is accounts payable. Very good. Now let's move to number 2, tax owed. Taxation is one of the biggest burden and the biggest liability that an individual or a company can have. So this includes any taxes that a company has not yet paid to the government, such as income tax, sales tax. But for an individual, it may include the income state tax, the income federal tax, the location tax. It may also include the Medicare, the Social Security tax, etc. Now we move into another liability that many persons have, loans. Yes, a loan. This is any money that a company has borrowed from a bank or an individual has borrowed from a bank, a financial institution, or other lenders. Loans may be secured. When we say they're secure, we mean they are collateralized. All right, so a collateral is required. Or unsecured, where there's no collateral requirement. So it is based on good faith. And these there are liability, especially depending on the interest rate. Then number 4, we move into our rents and mortgages. And these are a type of loan that is used to finance purchases of real estate. Then we have the deferred tax liability. These are the tax liabilities that are created when a company has tax deduction in a given year and are generated in a taxable income subsequent to that. The excess deduction can be carried forward and used to offset future taxable income. So that there is just something for us to look into. Then we have rent and lease obligation. This includes then any agreement that a company has to lease equipment or properties from another party. Beautiful. Now we move into pension and post-retirement benefit. And these are just specific to companies, because after an individual would have done their time at a particular company, they may require to leave that company or leave that establishment. However, upon departure, the company would still have to pay them out a pension based on their pension contribution. So this includes any obligation the company has to provide retirement benefits to its employee. Then we have number 8, the contingent liability, which are liabilities that are potential liability that may arise in the future, such as lawsuits or claims against the company. So individuals have lawsuit protection, and they usually have different type of insurance policy and coverage for those. But when it comes on to a company, we have to take it a little bit more serious, because once you're earning money, there will be people out there trying their very best to get the easy money. Just like how we have in relationship, once you are a high value man or a man of means, you will have random women coming, making accusation, trying to allow you to impregnate them so that they can collect child support and all. So you have to be careful as a man, and it is very dangerous. So yes, females do in some instances have situations when they are targeted based on their family lineage and their affluence. But those cases are not as prominent as the cases in which females actually target the men to exploit them. Or you have situations where people just get married so that they can get a divorce, so they can get half of the man's wealth that he has worked for. But not you, because you are here to know how money works and what is the best thing to do to secure yourself and your future. Then now let us move into interest payable. This is the money that a company owes for the use of borrowed money, such as interest on loan. And yes, as individuals, we too will have situations where we owe money for resources which we have taken so that we can benefit the business development or benefit personal development. So some persons may have student loan, which is interest payable. You pay the interest on the student loan. You may have a house loan. You may have a car note. So these things requires interest to be payable. Then we have wages and salary, and this is usually specific to businesses, but not necessarily, because if you hire someone, an individual who is not a business, then you will have to pay that individual wages. So this includes money that a company owes to its employees for the work that has been performed and not yet paid for. So now we understand that there are assets and there are liabilities. So assets put money into your pocket, while liabilities takes money out of your pocket. If your assets and your liability are equal, it means that your net worth will be basically zero. If your liabilities are more than your assets, it means that you have a negative net worth. But if your assets are more than your liabilities, it means that you will have a positive net worth. So that there concludes this segment when we discuss assets and liabilities. It is a hope that you would have learned and understand the concept and are in a better position to safeguard yourself as you devise and divide what is asset and what is a liability. Thanks for joining us on the Dr. Kareem Ainsley Encounter, where we use cents to make dollars. Have yourself a money-filled day.